It'll come as no shock to many of you, but we are seeing the highest auto loan delinquency rates within the US since the 08-09 recession. I'm talking the 30-day, 60-day, 90-day delinquency. People are just failing to make payments, which is why you're seeing that huge repossession growth rate. We continuously see these higher trimmed examples like the Ford F-150 Platinum, the Limited, these higher graded vehicles that have driven the price tags up substantially.
2.2 million vehicles have been repossessed this year. And it's looking like it's going to hit 3 million. And you know the last time it hit 3 million was the 2009 recession. So, if some people still think that there is not a issue with just everything, it's pretty insane. $50,000 for an average vehicle. Most new cars, they just came out with the statistics, is $749 a month at a 6.8% interest rate. Used cars are $579 a month at an 11.6% interest rate.
People pay insane money for car loans. Over $700 for a new car and $600 for a used one at massive interest rates. And here we see how this is an artificially created market that drives people into a dead end.
This is awful. This is, again, I already made a video on this, but this is unsustainable.
There's going to be a huge price correction on used cars, and let me show you guys why. The 2022 Dodge Charger Hellcat that was just repoed. This is a beautiful car. This car has 70,000 miles on it in only 2 years. Another really nice car is a 2022 Toyota Camry TRD Pro. These are really nice cars, and they're pretty expensive, but it was just repoed. There's this 2023 G-Wagon G63. So you got damage there. Looks like they try to like break into this car or something. The tires are shot. The rear tire is flat, as you can see. And it's crazy to think that $100,000+ car was repoed. This is such a nice car, guys, but they did not take care of this car at all. Look at the inside, it's filthy, smells like weed, dirty. Sad, sad, sad. Here's a truck. This one's got wheel suspension, lifts, etc. It's got some rust right there. Yo, who knows what that is? This one's got 18,000 miles and it was repoed. And look at this one, guys. It's a 2024 Chevy 2500. This is such a nice truck. It's got 30-something thousand miles. Looks like they went off-roading in it. The interior is filthy. It honestly still smells like new. Cracked windshield. Rear bumper is gonna need repair. The bed is also dirty. One thing I don't understand is why banks still continue to give these loans out. Why these dealers still are able to sell cars like this when people can't afford these loans, right? So people are buying these new cars, dogging them out, putting tons of miles on them, and getting them repoed. And it's not just expensive cars. Look, this is a Chevy Sonic. Has some damage to it. The bumper's messed up, the fender's messed up, the windshield's cracked. And this is a cheap car, guys. This is probably like a $10,000-$15,000 car, and they still managed to get repossessed. Had to get one of the cars because it's way too hot. But anyways, guys, I see this pattern way too often. People are buying these new cars, these 2022 models, up to 2025 models. I've seen some 2025 models. They buy these cars, they want to stunt, but their bank account is stunting. So if your bank account's not stunting, don't be stunting on a car.
The average cost of a car has gone up an incredible amount. And what we're seeing is then the average loan value for auto loans has increased more than any other loan value. And that may sound like, okay, but if you think about it, mortgages tend to be the one that grows the most because house prices have appreciated so much over time. So the fact that the average auto loan has grown more than the average mortgage has over that 15-year period is telling, okay?
Banks and dealers were eager to give out loans because they wanted to make money. And when a person went bankrupt, they just took the car away. And here we see how the system is set up to get rich while leaving the average person with nothing.
Secondly, obviously, there is this double whammy. So not only is the car more expensive, but then more recently interest rates have been higher, right? And so, they're now going to have to pay more, not just for the principal, but also the interest. But I think one of the things that has caught many consumers off guard is, okay, so they're in the dealership, they're being shown some numbers. Some people get it and they go like, okay, yes, we can still do that. We can make it work. Because also I think people are trying to buy either the same that they had before or slightly better. Right? Not many people like downgrading, okay? But what they often forget about is that insurance has gone up significantly, as have just the cost of ownership. Repair costs have also gone up substantially. And so when all those things then hit them, they can be in a situation where we just can't make it work. With an auto loan, they will come and they will take that car away from you. And given that, so many people rely on that car to go to their job, to make their income, to do other tasks that are important, like their shopping or taking their children to the school or other things that they need to do, people don't willingly just default on these auto loans. And so I think it is a sign that correlates with the fact that, more households are struggling to make ends meet.
The next 5 years doesn't look good. It was a year and a half ago, it was expected to have 3.2% growth. Now the IMF is talking about a global recession on the horizon should the issue in Iran not be resolved. They're not saying that it is going to happen, but if it was to continue, like Ukraine, if it was to continue, this is where we're heading. I kind of feel like the US is heading that way, because when we look at the demand in the US, and this is where you should follow My Two Cents, who covers this stuff in great detail, credit card debt is one of the things that's propping up spending. What if people suddenly reached their limits, started defaulting, started tightening their belts a little? This is people adjusting their lifestyle and winding back spending because their credit cards are getting too high, their car payments are getting difficult, and things are just getting a bit tough and things are getting expensive. This is going to be really, really bad, especially if they really do come to the limit on their credit cards and they default.
The economy is held up only by massive debts and car loans that people can no longer afford to pay. And here we see how a deep crisis is about to begin. People's cars are already being repossessed, and what happens next, one can only imagine.
And their car loans and repossessions increase, which they already are. I can't see that the policies of the administration now are going to give anything back enough. It's not going to help the economy because the whole globe is in this. The next 5 years doesn't look good.
And the numbers CNBC just reported are pretty wild. Total auto loan debt in the United States has hit $1.68 trillion, a 37% increase since 2018. Nearly 86 million Americans carry outstanding auto loan or lease debt right now. And the average new car loan balance has jumped from $24,782 in 2018 to $33,519 today. That is nearly a $9,000 increase in less than a decade, and of course, incomes have not kept pace. 1 in 5 people who financed a new car in Q1 of this year signed up for a payment over $1,000 per month. The average interest rate on a new car loan is 6.9%, but if your credit score is under 580, you could be paying over 18%. Which on a $30,000 car over 6 years could cost you $14,000 in interest alone. And here is the stat that really got me. More than 1 in 5 new car purchases now include a loan term of 7 years or longer. 7 years. And the share of new car buyers earning under $100,000 has dropped from 50% in 2020 to just 37% today. New cars are slowly becoming something that only wealthy people can afford, which is definitely less than ideal to say the least. And tariffs certainly aren't helping. But
all these tickets are repos. All right, just got to the auction. We're at the repo lot checking out all these tickets. Look at this. All these are bank repossessions. As far as your eyes can see, all of these are a manifestation of bad financial decisions, over leveraging credit and budget. And unfortunately, it ends up in a lot like this, where it's going to be sold at auction, cycled back into the car market at a fraction of the cost.
Car debts in the US have skyrocketed, but wages haven't. Many people plan. Let's do that again. Car debts in the US have skyrocketed, but wages haven't. Many pay over $1,000 a month and take out loans for 7 years or even longer. And here we just see how a car is becoming some incredible luxury that can only be for very wealthy people.
2025 Toyota Camry, repo, all Suburbans, Audis, Toyotas, Ram 3500s, Jeeps, a bunch of luxury cars. 2024 Kia Telluride with only 16,000 miles repoed. Dealer charge $3,000 for a thorough inspection and reconditioning fee and $1,000 for interior protection, which is an additional $4,000 on an already inflated MSRP of $47,380. On a car like this, I guarantee you out the door is right around $60,000. If you had decent credit, you had probably a 13 to 15% interest loan, a car like this would be easily over $1,000. And don't even forget your car insurance. This Mercedes still has a temp tag on it and got repoed. 2019 Mercedes C300. Definitely seen better days. Hot sauce and duck sauce all up in here. but no financial sauce for whoever got that car repoed. Again, this lot is a manifestation of people who don't really understand what they're getting themselves into. They over leverage their financial situation, they over leverage their credit situation. So to prevent you being in this lot, please understand your financial situation, your credit situation, shop around the deal, and never ever accept anything that you do not understand. Because I guarantee you this lot is filled with payments that are 3 to 4 times what the vehicle should be worth monthly. 2024 Hyundai repoed, 2024 Hyundai repoed, Toyota Camry repo. So again, please understand your credit situation, your financial situation, and budget correctly when buying a new or used vehicle, because rates are astronomically high and the car market will never reset if the consumers keep buying into this high interest loan, high payment auto loans that are predatory, and all they will care about is getting into a vehicle. So
We see how car lots are packed with good cars, from luxury models to ordinary ones. And the guys in ties promised all this, saying the payments would be easy. Instead, it turned out they were hiding the real cost, and people were just driven into a corner and forced to leave their cars. Or rather, they were just taken away.
I understand situations can be difficult, situations can be unique, but in most cases, please plan for the midterm and future.
Car repossession is going insane this year. In the past 3 years, car repossession is up 43% and is the highest it's been since the 2008 recession. I'm telling you guys now, I made a video prior about people trying to live luxury lifestyles. This is exactly what that foretells. This is exactly what happens when people overspend beyond their means. Stop trying to keep up with the Joneses. Stop living beyond your means. These dealerships are running game on you. You do not need a luxury vehicle to sustain yourself. It's literally made to sustain an image. Now, if you can afford it, great, amazing. Get the luxury vehicle if you can afford it. But if you're someone who's making $50,000, $60,000, $70,000 a year, why are you driving a car that is equal to the salary that you make? It doesn't make sense. Get something that is affordable. A high reliability vehicle such as a Toyota, a Honda. Those cars last years to come. They're affordable. They're gas efficient. You're not forking out $200 a week on premium gas to fuel these vehicles. And they hold their value. I'm telling y'all, it's these Mercedes, the Scat Packs, the BMWs, and they're not even reliable cars. You guys are buying Mercedes only to have a maintenance package that costs more than the payment that you're paying for the car on an annual basis. You guys are buying BMWs and then having to trade in the BMW because you can't afford the maintenance. And then don't even get me started on the depreciation of value of a BMW vehicle. 2023 BMW vehicle right now has probably depreciated well over probably 50% in value. You guys have bought a BMW brand new off the lot, $50K, $60,000. Its resale value is probably like $30,000 right now.
So today I'm going to talk about something that seems like a smart way to buy a car, but in actual fact, it's going to cost you a lot of money in the long run and perhaps trap you in a cycle of debt. And
You bought a car for $60,000, but you can only sell it for $5,000. And this is a financial trap from dealers who have known everything for a long time, but said nothing to you because they wanted to profit off you.
I am talking about balloon payments. So when you walk into a dealership, right, and you see an affordable car and you realize, wow, that's actually really cheap. I could easily afford that on my salary. There's a good chance that there's something known as a balloon payment attached. So what is a balloon payment? So instead of paying the full price on the car, let's say it's a 5,500 Rand payment on a car, you only pay 4,000 Rand a month, right? This sounds nice, right? And this is where they trap you, right? Because what you do know, right, they do tell it to you, but what's sneaky about it is that 1,500 Rand extra that you're supposed to be paying on your vehicle extra every month, well, it gets put aside until the end of your finance cycle, right? Where you have to pay all those 1,500 Rands that you've incurred every month. You have to pay that cash. And it's usually a cash sum of 60, 70, 80,000 Rand or more. So what is the problem with this? Well, number one, the balloon is massive. Most people don't have that type of cash lying around, and it's so difficult to save up for it because emergencies and life always happens, right? And another thing is that you pay interest on that balloon as well. That's the part that they really don't tell you. Even though you're not paying down the balloon on your contract, right, they are still charging you interest on it. And at the end of the day, you're going to have to pay interest on that cash amount that you have to pay back at the end of the cycle. And this will probably cause you to fall into a refinancing trap. And the best way to do it, right, is to pay off that type of money is to take out another loan. And you're going to end up paying interest on that loan. Does this sound familiar? It sounds like you're going to be caught in a debt cycle, paying loans to pay off other loans, right? And another thing is that you might get caught in a trade-in cycle. So another option is to trade in the car before paying the balloon payment, and then getting another car with a bigger debt associated it with a bigger balloon payment. And this ends up trapping you into a cycle because you never really own the car, right? You're always trading it in. And let me tell you, it feels really good to get those car papers and to have a paid off car. And if you like videos like this, please consider giving me a like and a follow, because I want you to be successful with your finances.
This is how easy it is to buy repossessions in 2026. And before you can even buy a repossession, you will need auction access so you can get access to buying these vehicles at a wholesale price. Before I continue, if you're interested in getting auction access and your dealer license, go ahead and comment free. I have a webinar happening this Sunday, so go ahead and lock in with me.
Small monthly payments are a scam. At the end of the contract, you'll still pay a large sum, and this scheme is designed so that you're constantly paying out money but don't actually own the car. It's designed to cheat the average person.
Repossessions will never be sold to the public, especially when it's coming from a lender. So the first thing you're going to go ahead and do is open up an app called Mannheim or Odessa, but for this example, we're going to use Mannheim. Once you open up Mannheim, the first thing you're going to go ahead and do is click Find Vehicles at the bottom right here. Then what you're going to do is go ahead and go to filters and then click seller types. Then a whole bunch of different sellers will come up, different banks, Ally Financial, American Credit Acceptance. Went ahead and clicked some big bank names like Capital One, Chase, Chrysler, and Credit Acceptance Corp right here. And this list came up right here. So you can see they have 2024 Range Rovers, 2023 Range Rovers, a whole bunch of newer vehicles that people have defaulted on. And as you can see, the banks are just trying to get out of them. They're going way below MMR. MMR is just Manheim market rate. And as you can see, this one right here is selling for $54,000 when on average at wholesale price it sells around $58,000. Banks are just trying to dump these vehicles as fast as possible.
You're underwater by $10,000. What is the car again? It's a 2025 Honda HRV. $34,728.76 is basically your monthly income. Certainly is after taxes. Minimum monthly payment $599.15. What's it worth?
Maybe like 20,000.
24. You're underwater by $10,000. What a joke! You just bought this.
Well, yeah, I was upside down on my other car, and I had to roll it over onto this car. At least it's a 2025, so it'll last me a
on the
while
last
longer.
cars, you were underwater. Now you're underwater again, so it's the same thing. So we may as well roll it into a $60,000.
But I have a better interest rate, so it makes it okay.
It doesn't make sense. You're going to be paying this. It doesn't make sense when your payoff term is February 21st. 2031. That's insane.
America has an auto loan negative equity problem, and it's exactly why people need to start leasing their cars. So according to Edmunds, in Q4 of 2025, 29.3% of vehicle trade-ins had negative equity. And the average amount owed on those underwater trade-ins hit an all-time high of $7,214. And as a financial educator, I just want to tell you that if you're not keeping your cars 6, 7, 8 years or longer, you should probably start leasing your cars. So here's what's going on. People are buying and financing brand new vehicles. They're driving them for 3 to 4 years. And then when they go to trade them in, not only are they getting screwed over on their trade-in, they find out that they have negative equity. And then what they do is they take that negative equity, they roll it into their next vehicle purchase, and this vicious cycle just continues to happen over and over because somebody told them leasing a car was a bad financial decision.
People trade in old cars with debts and roll them over into new loans. And here we see how banks, instead of helping people in some way, they drive them even deeper. And they stretch these loans out for years. And at that point, a person just falls into a debt trap and can't get out of it.
Now, I'm not saying all leases are good, but if you use my 1.25% rule of leasing, you'll know which vehicles to lease and which vehicles you should avoid leasing. We really don't need to overcomplicate this. The biggest cost in vehicle ownership is depreciation. And oftentimes with leasing, your depreciation is subsidized by the manufacturer. And not only that, you'll pay less in taxes when you lease, you'll have a lower down payment, you'll have a lower monthly payment, and you don't have to worry about negative equity. And if you want to use the ultimate tool to see what your lease or finance payment's going to be from the comfort of your own home, consider using the Drive Match calculator. Financial knowledge is power. Please like and follow for more.
The U.S. is officially in a new car affordability crisis, and the numbers are brutal. The average price of a new vehicle is now hovering around $49,500 to $50,000, while the average monthly payment has climbed into the $730 to $750 range. And with interest rates still high, buyers are paying thousands more over the life of their loan than they did just a few years ago. To survive, shoppers are stretching loans longer than ever. 7-year and even 8-year loans are becoming common, not because people want them, but because it's the only way for them to make the payments work. That's also driving a surge in negative equity, where old loan balances get rolled into new deals. Automakers, they do share some blame too. Many have moved away from affordable cars towards more high-margin trucks, SUVs, and premium trims, pushing average prices even higher. The result is that first-time buyers and middle-income families are being pushed out of the new car market altogether. Now, I do think that sooner or later, one of these automakers will go after that market segment because it is just sitting there for the taking. But until then, fewer affordable new cars today means a tighter, more...
Can we agree that the automotive industry did this to themselves? During COVID, everything was marked up. You have to buy the etch, you have to buy the window tint, you have to buy the warranty. They raped everybody, graped everybody, overpaid on these cars. And now people are voting with their dollars. They just refuse to buy. And now what? Dodge just offered 0% 72 months. They looked at Ford and said, hold my beer. Every single one of their Dodges, 72 months, 0%. You had a repo yesterday? Oh, you get 3.9%. What good does it do to those who have the best credit? Nothing anymore, because desperation has kicked in. They're on desperation mode trying to move metal. Some of these dealers have 23s, 24s.
Dealers are offering 0% interest loans, but now nobody's buying these cars. Before, they jacked up the prices significantly. Now, people simply don't have the money to buy all this. And here we see how dealers just shot themselves in the foot and are now wondering why things are this way. This is the result of their own policy.
25s and now 26s inventory on their lots. And they're paying interest on every single car every month that passes. And what's interesting, if you notice, you don't see these commercials advertised on TV. It's the salespeople. They can't even afford to advertise, so they're on.
Please let us know down in the comments section exactly what kind of car you currently drive and whether you think you should buy a nice car, meaning an exotic and cool one. If you don't have the funds for it, it'll be interesting to hear your thoughts. Subscribe to the channel. Stay tuned for new videos. They will also be cool, interesting, and informative.